You're listening to the Decentralized Talk Podcast, your crypto connection.
Decentralized Talk. Decentralized Talk.
Alrighty, guys, welcome to another episode of the Decentralized Talk Podcast, D-Talk. We got a great show for you guys today. We're going to be covering the philosophy of Bitcoin. We're going to be talking about regulation of cryptocurrencies broadly. We're going to do a coin spotlight on Wanchain, and we're going to follow up this week on who is winning the 2018 Coin of the Week. I got a big smile on my face for a couple of reasons. One, this is our laid-back episode, so we're going to be enjoying a couple beverages. And we're going to be relaxing and have a little bit more of a casual show today. We're not going to do this every week, but today we're gonna kind of let our hair down, as it were. Although none of us have long hair, and enjoy the show a little bit and have a good follow up weekend from the Super Bowl. So just as a reminder, everybody, this is not investing advice. This is just our opinions. We want you to do your own research, take the coins and take the information that we're giving you and use it to find out what is the best decision for you in your personal investing and information career here on the internet in the cryptocurrency space. I am Brandon Suttles. I'm here with Heston Rennick and Dustin Prater, and we're going to get started for you guys today with This Week in Cryptos.
Hey, I just want to say what's up, guys. This is Heston. I'm so excited for this week, first of all. We got the philosophy of Bitcoin. I mean, I've been waiting to talk about this stuff because we get caught up in the price. And is it going up? Is it going down? What percentage is it up? What is it crashing? Are we in a bubble? All this stuff. But we stray away from the importance of how this can change the financial aspect and the world in general. And I'm so happy to talk about this. Also, make sure you follow us on Spreaker, on Google Play, on iTunes. You can follow us on Twitter at DTalk Podcast, also Facebook at DTalk Podcast. So get in the know, stay on the show, stay on the down low.
What's up, guys? Prayer here. I'm just ready to talk about some cryptos, go through some Bitcoin philosophy, some Lightning Network, follow up on our coins of the week, and ready to have a good time. Let's go, guys.
All right. Awesome, guys. So this week we're going to talk a little bit about Bitcoin philosophy. I think too many times this is overlooked by the mainstream media, right? They want to talk about price. Too many people want to talk about price. The big investors have gotten into the market and changed the conversation away from something that was ideologically and philosophically driven, and then now put into something that is just kind of numbers driven. So I think as everything is kind of panned back out, right, and we're sitting pretty strong around $8,000. Let's not talk about $8,000 anymore. Let's talk about the reason why we all kind of attached to this thing called cryptocurrency, this thing called Bitcoin, this thing called the blockchain. So Hesto, tell me your broad concept of the Bitcoin philosophy of decentralization.
Oh man, it's a big question. I think it all stems from what Bitcoin was meant to be. Okay. So like the world we live in today and the world we've lived in for a long time, financial institutions have been the mediator between transactions. Okay. So if I want to send money to you, Brandon, or you, Dustin, there has to be somebody in the middle. Okay. There has to be a bank or Visa or MasterCard or somebody to mediate that transaction. Okay. Now, Satoshi's idea was why? Why does there have to be somebody in the middle? Why can't I just send Brandon money? Why can't I send Dustin money? And why can't they send me money back? Why does there have to be somebody in the middle? Well, there's a way to do that. Okay. And that idea was blockchain technology. Okay. And this is, and we'll have a whole nother podcast on what blockchain is, but in the simplest terms, it's an open ledger that can't be edited. Okay, so it's a ledger, a record book of transactions that everybody can see but can't edit. Okay, so
Yeah, it's funny. If I just make a point, when you're describing blockchain technology to your traditional millennial, I think it's almost more complicated. And I think we'll find this as adoption becomes wider spread. But people over the age of 40, 45, they have experience firsthand. They had to keep a checkbook, right? There's no online banking.
exactly.
So I'm 33. So even in my generation, when I first got my first bank account, I had no skills whatsoever with managing a checkbook, but I would call constantly. Yeah, because it's all done online. Yeah, I just hodl all everything. Hodl everything. But people over the age of 45 have direct experience managing a ledger. And I think the concept of a ledger, you don't have to explain what is a ledger and then go into this is a decentralized ledger and this is an open ledger that's open to the public. They already know what a ledger is. And so I think if a person's older, then it kind of gives you a leg up on the conversation.
Yeah. I mean, I think the point is we should be in control of our own money. You know, if I want to send somebody money, I'm in control of that. I don't have to go through a bank or some institution to distribute that money. And that's the way it should be, but that's not the way it always has been. And I think an idea was established back in 2009 that said maybe we could do it a different way. Now in the US, it's hard to think about it like that because we have a stable currency. An analogy that I heard that I just love is trying to explain a stable currency or an unstable currency to an American citizen is like trying to explain water to a fish. It doesn't make any sense because it's always been around, it's always worked, and nobody ever questions it. The US dollar has just worked. Sure, it's inflationary, and everybody remembers, their grandpa saying, back in my day, I got paid $1 a day, but gas was a nickel. You know, everybody understands that, and everybody just accepts that. Everybody accepts that, like, things were cheaper back in the day. You got paid less back in the day, and that's just the way it is. Inflation is just the way it is, but that's not the way it has to be. And so there's a new way of thinking that was developed. I mean, well, it's always been around, but a new technology that was developed around that idea of it. Currency doesn't have to be inflationary. Your government doesn't have to have the ability to just create new money. There can be another way. And so Bitcoin was developed deflationary. There's only 21 million Bitcoin out there. So it can't be inflationary because you can't just print more money when you want to print more money. So, I mean, we could talk about this for hours, but there's so many benefits to this. Now, in the US, it's hard to see because we have such a stable currency. But if you take third world countries that have a corrupt government or a currency that just doesn't work half the time, take Argentina, for example.
Or has a much higher inflation rate.
Exactly. You would think the US has a high inflation rate. But if you compare that to other countries, it's incredibly low. It's crazy low. So
it's fraud and abuse. I think that to me, that's the big fundamental thing for Bitcoin. Trust. You have to have trust in the markets, right? To use a banking system, you trust in your bank. They're called trusts, right? Banks are obsessed with trustworthiness. The big pillars on the outside and the big concrete blocks and the marble, everything is designed specifically and on purpose to try to impart trust on their brand. And the reality is there is no trust. It's all bullshit. So
and that's the great thing about blockchain technology. It's trustless.
Takes the trust out of it. Absolutely.
It's a trustless technology.
You trust you just trust the system. The system
will never add a $10 fee to your checking account.
Exactly. There's no overdraft fee.
I mean,
you either have the money or you don't have the money.
Although I'd like to figure out a way to overdraft Bitcoin.
Me too.
And if there's somebody who could, I'm sure it would be me.
Well, you can just go through me. I'll charge you that overdraft fee.
Well, Bitcoin wasn't the first digital currency. There was multiple digital currencies before Bitcoin that just never took off.
Very true.
They just perfected the system with the blockchain. The previous digital currencies had issues with, double transaction, security, all that other stuff. And even PayPal. PayPal was supposed to be a digital currency. You can look back and you can see where PayPal said it was supposed to be Bitcoin, but it got centralized. It started, as a business and took off from there. Yeah. And so, in the beginning, PayPal wanted to basically be Bitcoin, but they found another niche, and, PayPal is what it is today. A lot of people use it, but it's not a decentralized currency.
Well, yes, there were lots of digital currencies. Does anybody remember e-gold back in the 90s? or the Coca-Cola bucks. Coca-Cola used to distribute their little dollars, and then you could go to the vending machines and buy their Coca-Colas using their little digibucks things, whatever they're called.
Marlboro points.
So there lots of things. Yeah. Lots of things tried it. Okay, lots of companies tried it, but without that strong base of technology that can't be that has minimal flaws, it would just never would work. Liberty Reserve tried it for a long time too, and it didn't work either. E-gold had a chance. E-gold had a chance, but without blockchain technology, it just doesn't work. And blockchain technology, it makes it secure. It makes it so there's no centralized entity. So there's nobody in the middle. We're literally working off peer to peer. And
it guarantees verification of your transactions.
Exactly. There's so many benefits to it. And like I said before, in the US, it's hard to realize. It's really hard to realize this big scale of like how this could change the world. Because in the US, you're like, well, who gives a fuck? We got the dollar. I go to the store, I buy my Gatorade, and that's end of transaction. Boom, done. I'm on with my day. So it's hard to realize that.
Are you from Jersey now, Hesto? Is that what you said?
Yeah. I go to the store. I go to the store. I go to the 7-Eleven. I pick up my Gatorade. Bada bing, bada boom. I got it. I'm done.
I go to the gym.
Tan, laundry.
I get my laundry. All with my dollar.
#GT for life. But my point is in the U.S., it's hard to realize. It really is. It really is. But if you take countries that don't have a stable currency like the U.S. does, then you really see the implications of what Bitcoin and other digital assets can do. Take Argentina in 2011. They suspended their currency. You couldn't buy or sell it. You couldn't buy anything with it. You couldn't sell anything with it. So their currency was dead for a limited amount of time. What would you do in that situation? What would you do? Except if Bitcoin was there, that's your side bet. You have a currency.
You're right. It's your hedge against inflation.
Exactly. That you have a currency that you can, transact with somebody else. You say, hey, I want to buy that couch. I'll give you some Bitcoin for it. They sell you the couch. They got some Bitcoin. So in the U.S., it's really hard to realize like the implications of cryptocurrencies, but on a worldwide scale, you can really, really, really see how it could change the world and the financial system, completely. You don't need these corrupt governments to be issuing out these bills that don't mean shit. They don't mean shit half the time, because they're just inflated above all reason.
So speaking of Bitcoin being able to change the world, what are the biggest issues that we've run into? Even though I think we're all on the same page, right? We're on the same page that this is something that really could change the world. It focuses on Bitcoin. It's specific about Bitcoin. There's a lot of ICO programs out there, and there's a lot of altcoins out there that have potential to aid and assist in the decentralization of money, or in Ripple's case, the centralization of money, but the fluidity of financial transfer. But fundamentally, Bitcoin is running into some issues. Satoshi has described these issues as solvable by increasing the size of the blockchain. certain proponents of changes to the network come from SegWit to Lightning, to SegWit and Lightning, to additional chains, Bcash, Bcandy, Bcrap,
B-Diamond.
B-Diamond,
Super Bitcoin.
Be who you want to be.
Platinum. Bitcoin Platinum. I've heard that one.
So specifically, I think the one that's taken the most hold, the most adoption from the believers' side, right? The people who are ideologically driven on Bitcoin and married to Bitcoin, I think the solution that's most prevalent is the Lightning Network. So just briefly, the Lightning Network can be super complicated. It can also be super simple. I've seen every video on the internet about the Lightning Network. Some of them are just so far over my head. None of the words make any sense to me. And some of them are so overly simplified that I think they don't make any sense. So what I'd like to do just in this next segment is talk about Lightning. And let's talk about what we know, what we don't know, what we understand, and what we don't understand from a perspective of three guys who did some research on the internet, three guys who are well, I'm not going to say we're competent, but we're in the realm of competency. And so we've kind of put that juxtaposed to, well, that's debatable. We're going to go to top coin picks of 2018. We'll see how that pans out.
All right.
But so the point is you have to talk shit when you're up. There will be a point in the year here where I'll be down, and then I won't have an opportunity to talk shit, so I have to talk shit now.
Yeah.
But if it follows the trend right now, I don't know that Heston will ever be up. He hasn't.
Oh, you got just piling it on, huh? Piling on the haters. Oh, I love the haters.
Collect them.
You don't know what we're talking about. We're referring to the Coin of the Week challenge, where each of us throwing $100 at a coin every week, and Heston is yet to win one of those weeks.
Also, it probably is worth noting, as your leader, I will point out that literally none of us are up right now. So of the $400 investment, none of us have made more than $400.
Well,
we're all down.
Hey,
although it was during the biggest crash of one of the largest crashes in the history of Bitcoin.
I will note, well, not in the history of Bitcoin, but I will note that it's tough to be up when your total market cap for the cryptocurrency goes from 700, 800 billion to 300, 400 billion. So it's really tough to be up at this point right now. But we're going to keep on cranking out the coins of the week, and we'll make money eventually.
Yeah, we're going to make money eventually because of the investment and the time that we put into learning the advances in the Bitcoin and the cryptocurrency space. So one of the most important ones, obviously, is the Lightning channel, right? Or is the Lightning network. My understanding of the Lightning Network is that, so for a lot of people, they want to know, why is it called Lightning Network? I've never seen anybody actually answer this question, but to me, the answer seems clear if you look at a graph of the designed or intended route of transaction communications in each payment channel. So you start with one person that connects to potentially another person that connects to another person, and it spreads out in the chain almost like a lightning bolt. The way that you see lightning kind of proliferate right out through the sky, path of least resistance. And that's the same thing that this Lightning network does, is it takes your transaction and it pushes it out through the path of least resistance. So one of the most popular videos on the internet is the idea of the coffee shop and Bob, and there's a transaction between Bob and a coffee shop. How does that work? They set up deposits, they put them into a multi-signature address, they create a balance sheet. Bob puts 0.5 Bitcoin into the payment channel, holds the money in the payment channel. Then the coffee shop puts 0 Bitcoin basically into the channel because they don't give any refunds. Then the payment channel is opened on the blockchain network. Now the channel is open, so Bob's got his money in there. Then he can order a cup of coffee. This is already, we're only on step 3. And it's already so incredibly complicated that the idea of somebody adopting this to me is almost unfathomable.
I'm already confused. You said White Wing Network?
I think Lightning Network is
White
just
Wing?
a marketing. Lightning is fast.
Okay. Hey, let me.
I need to get another whiskey.
Let me. While you're doing that, let me try to explain it how I learned it. Because I'm a total noob when it comes to Lightning Network. Okay, so for my basic understanding of this premise, right, is the Lightning Network works off the blockchain to increase transaction speed. So the way it works off the blockchain is kind of like a bar tab. Okay, so if I have a company that I want to transact with, say it's a bar, we'll just use that for example. I want to go to this bar called the library. All right, so just like a bar tab would normally work, I go to the bar and I give them $1,000. Yes, we know your drink is empty. Go fill it up. So I go to this bar and I give them $1,000 and I say, hey, now I have a bar tab. So every time I go into that bar, I spend a little bit of money. It comes out of my $1,000 bar tab. That makes sense, just like how a bar tab works. And that's kind of how the Lightning Network works. It's
and
not.
Freddie, you're on board with this so far, right? I think we agree with everything on this analogy, right?
Yeah.
Okay. Yeah. Okay.
That's
Proceed.
right, as far as I know.
Yeah. So proceed.
So far, okay. Let's say in terms of Bitcoin instead of $1,000. Let's just say 1 Bitcoin. Okay. So I give this bar 1 Bitcoin, and
You got bottle service, I hope.
Well, this is 1 Bitcoin.
Multiple bottle service.
This is 1 Bitcoin over time. I'm giving them 1 Bitcoin, but that doesn't mean I'm giving them full access to the full Bitcoin, from what I understand.
Yeah.
Okay, so this is all happening off the blockchain. So none of this has actually touched the blockchain yet.
Yeah, you're about to hit on a very important point in Lightchain in the Lightning Network. Go ahead.
So I'm opening a tab with this bar and saying, library bar, I'm giving you 1 Bitcoin, and I'm going to come in here every weekend, buy a couple drinks, and it's going to take out of my Bitcoin. Okay, none of that has hit the blockchain yet. Okay, so I come in there every weekend, every Friday and Saturday. I'm getting drunk and spending my Bitcoin on these vodka sprites, right?
Strippers.
And strippers. I mean, well, that wasn't the.
This has turned into
It wasn't the kind of bar.
Club.
Yeah, that wasn't the kind of bar I was picturing. But sure, lap dances too. Add them in there. So those are all coming off my tab, right? My Bitcoin tab.
Your very sticky tab.
Yeah.
Well, it's on the blockchain, so it's not going to get sticky. One more benefit to the Lightning Network.
So, okay. So the day comes when I go, you know what? I'm done with that bar. I'm done going to the library bar. I'm done transacting with this bar specifically. I've spent 0.25 of my 1 Bitcoin that I threw into there. So I'm done. I close that channel. I get the 0.75 Bitcoin back, and they keep the 0.25 that I used of my tab.
Yes, I think Prater, you agree? That's exactly correct so far.
Yes, and when that
happens,
gets closed, then it gets processed by the main blockchain.
All right, so here's the part. This is the part where it gets more complicated, guys, because in a practical application, take that scenario. So everything in that scenario is absolutely accurate. So, but what is the probability? First of all, we said one Bitcoin, right? That's $8,000. So maybe it wouldn't be 1 Bitcoin. Maybe you would put, I don't know. Let's say if you're going to the bar all the time, you put realistically
roller. So like 4 Bitcoins.
For like minimum 4 Bitcoin.
Minimum 4 Bitcoins.
So you put your money in there. Let's say it's $500 worth of Bitcoin. You actually put like a lot of money. Just like you're taking this out of your bank account, not earning interest on this, and you're setting this in this payment channel. So already that to me doesn't seem realistic. And then furthermore, well, I want to go to more places than this fucking bar, right? So I want to go to the coffee shop. I want to go to the bar. I want to go to, I want to buy gas at my gas station pretty regularly. So that would mean that then I would have to to do this initial. So this is just a single channel, communication. So I would have to have some Bitcoin out of my total stash of Bitcoins. I don't know how much everybody has out there. Statistically, almost everybody has less than one Bitcoin.
Wait,
so
you guys don't have 100 Bitcoin like me?
Oh, we were just talking about that.
No, I was talking about everybody else. I was talking about all the channels.
Oh yeah. Well, I have hundreds.
The way I understand it, though,
Bitcoin.
if you have that one wallet or channel open, so you may have 0.25 Bitcoin in there. Now, the same bar that Heston goes to, the library, there might be 18 other people that go to that bar, which allows you for multiple other channels to pay multiple other people. Kind of like the 7 degrees of Kevin Bacon. Like, you can take these paths anywhere to pay any other any other person you may be sending it to. So,
But if I wanted to use a direct connection,
you won't
between
use a direct connection.
Exactly. I would go through the nodes.
You will never use a direct connection to
exactly.
somebody.
That's what I was trying to get to.
Yeah, sorry.
No.
I beat you to it.
That's what I was trying to just open up, like because the original or the one-to-one version of the Lightning Network is pretty easy to understand. Yeah, but it becomes impractical, and that's why the development of the nodes. And so once you have these nodes, then you can make these disbursements of transactions, and that opens up other issues, right? Because you've got multiple channels opened up and lots of money kind of just sitting in these payment channels, and that's where people begin to set up a node. By the way, I heard that you can set up a node on your phone. You can set up a Lightning node on your phone. I searched diligently.
Shit.
No shit indeed. So I searched diligently on the internet to try to find out how to do this. And by diligently, I mean it was about 20 minutes. I was in the mall parking lot. Yeah, but I mean, I've read like 3 Google pages deep, so that's almost the entire internet.
You're basically an expert.
I'm basically an expert on something.
Do you currently have a node on your phone?
No, but this is what I'll commit to all the listeners out there. Everybody, reach out to us at DTalk Podcast on Twitter, at DTalk Podcast on YouTube. Follow us, because in the coming weeks, I'm going to dedicate the next week to figuring this out. I'm going to email everybody I can email and figure out how to create a Lightning node on my cell phone. And then we're going to talk about it in the consecutive podcast. I don't know if it's going to be next week or the week after, but as soon as I figure this out, I'm going to lay it out. We'll do a video, everything we can to help everybody else out. We want to grow this thing called cryptocurrency. We want to include you in the trip to the moon, people.
From what I understand, it would be nice if there was a lot of Lightning nodes out there, but there's no necessity for a large amount of Lightning nodes. If there was 10, 15 huge nodes out there, that would almost supply the whole network alone. And that kind of leads me to an issue with the Lightning Network. So, security is one thing with Lightning. If SegWit's not implemented, there's security issues behind it. The Lightning Network basically is verifying transactions on these nodes for all the transactions off the network. So at what point is it going to be needed to be regulated? If it becomes regulated, what regulations are going to be needed to run a Lightning node? Will you be able to run one legally off of your phone? or will you need some sort of verification from the government that you're going to be able to run this Lightning node? If that becomes the case, who's most likely to run these Lightning nodes?
Yeah, almost guaranteed if there's an opportunity for the government to weasel themselves into it, they will. And it's not just the government, but what it is it's sadly, I mean, the truth is it's the early adopters, it's the people who get out in front.
Mm-hmm.
And it's the same thing. So it's the same thing in the pressure washing industry. Real quick analogy. real quick analogy. In the pressure washing industry, if you want to carry water, and this is almost every major metropolitan area, if you want to carry water, you have to have a license to carry water. There's no reason to have a license to carry water. What it is it's a regulation that was lobbied for by other established pressure washing companies, right? It's something more basic than pressure washing, so this is why I give it as an example. But the local pressure washing industries would lobby, right, to get this regulation on there, so it puts an extra increased barrier to entry, so that smaller pressure washing companies, it's more difficult for them to come up. So if there's an opportunity for regulation, guaranteed they'll put a regulation on there, if for nothing else to
the banks are going to push for regulation.
Yeah, because they want to be the node, right?
They want to be the node. That's a way for them to push into centralized Bitcoin, because it's threatening the banks right now. I mean, you're threatening a $90 billion industry that is the banking industry. If they're going to push back, and if they can find a way to push back and get into Bitcoin, you know, they're going to use that to find a way to make money and to do it.
I think what we forget a lot of times is that Bitcoin is still in its infant stages, and we have a lot of work to do. I've not given up on Bitcoin. A lot of people have. I think that there's a lot of work to be done. I don't know if Lightning Network is the answer. I don't know if SegWit 2x is the answer. But I think that the entire world of blockchain technology has a lot of work to be done, and we're talking years out. We're talking years out in the future.
Right, it's a long term.
Yeah. I mean, we're talking Lightning here. Honestly, the currency side of it doesn't interest me near as much as the
store value
side of the blockchain network. You know, coins like Neo, Ethereum, ADA, that actually have a business use behind it. Wanchain. These are the ones that are interesting, that are more interesting to me at the moment. I mean, I like Bitcoin. I do own some Bitcoin.
This is where we disagree, brother, because I think all those coins will do great as well, but I think Bitcoin will be the Mac Daddy for years and years to come. I think it's gonna find a solution for all these issues. Bitcoin is going to be. I do believe that Bitcoin will be the currency of the future for a while, not forever, but for a while.
The world currency.
That's Phoenix coin. The Economist predicted that in 1987.
It's the next Phoenix coin. No. That's my belief, but I think that's where we disagree.
I love it. I mean, that's the great news is time will tell, right? So there will be an answer to this question.
I don't disagree with that. I don't dislike currencies in the cryptocurrency space, currency coins. I just find business case use coins more interesting, personally. I mean, Bitcoin is Bitcoin. It's going to be a storage use case, a currency. You know, you can transfer money, but it's complicated when you get into the Lightning Network and everything it can do and all that, but it's not interesting to me. I mean, you look at Wanchain with the RFC tags and you know, how it's going to work with cell phones. You look at IOTA with the Internet of Things and how they're doing micropayments with cars and all that stuff. You look at Ethereum and how all these dApps are being built on it with Ether tweets and all that. It's it's not that it's any better or that it's going to take over Bitcoin. It's just there's so much more there. It's so much more interesting to me. Not that I think it's better. I'm not arguing that.
I totally hear what you're saying. I think we're on the same page, honestly. But I think when it comes down
Screw
to it,
Bitcoin. I don't know what you're talking about, Hesta.
I think when it comes down to it, Bitcoin is going to be the one that really fundamentally changes the financial aspects of this world.
I think it already has.
I don't.
Yeah, that's a tough.
I don't. I think it's
everybody just dropped all their gold and jumped into the financial industry of the world. People just dropped enormous amounts of gold. Traders from the World Crypto Network who talk about their large position in gold, have had large position in gold as a hedge against inflation for over a decade, sold all of their gold, 100% of their gold, and moved it all into cryptocurrencies. The last sessions of trade-offs that we've seen in the stock market have not come with a subsequent trade-off in the crypto market. And so, I mean,
surprising.
It is surprising because the money is not leaving the economy.
Where's it going?
It's not leaving the economy. I mean, that's what it does. I think it's what it's showing is that the money is not leaving the economy globally. It's just changing itself from gold and dollars into digital currencies. More and more and more people are seeing it as a more legitimate store of wealth. And Prater, I thought what you said was actually really interesting because it kind of you've got Bitcoin, and all the new advances in Bitcoin are like crutches, or like pain pills. They're helping hold up and stabilize this thing that already exists. But the newer coins, they start on the first day with all the advantages, and have seen all the struggles that Bitcoin went through to try to present something new and fresh. I thought it was really interesting.
Thank you.
I haven't picked a side yet, but
Oh, I've picked the side.
Well, and the Lightning Network
it's Bitcoin side
is actually going to use smart contracts for the off-chain wallets.
That is crucial. It can't operate without smart contracts. Okay, because if somebody at the copy shop wants to say, "Oh, I'm going to take all your 1 Bitcoin that you just sent me," even though you're really only paying me 0.000005 Bitcoin for that cup of coffee, who's to say that coffee shop is wrong? Only a smart contract. Only a smart contract. We're not going to get lawyers involved. That's the whole point of the blockchain technology, is we're not going to get lawyers involved. We're not going to get legal.
This is my $300 an hour lawyer for my cup of coffee.
Yeah, exactly. That's Starbucks, man. They're ripping me off.
You actually sued the barista.
Well, the way I understand it too, with SegWit implemented and Lightning implemented as well, there's a use case for third-party regulation of the off-channel wallets. So somebody else can regulate or monitor your wallet so that nobody can steal the money from you, basically, or close.
Unless you're John McAfee.
Unless you're John McAfee. But no, I mean, I see benefits and I see pitfalls in Lightning Network. There's obviously way more technology behind it than I could ever learn in 6 months of digging into it. But I see where both sides are coming from. I see the benefits on all of it. I see some downfalls to it too. Obviously they'll probably have their checks and balances to pull off either side of it. I just don't know where I stand at the moment.
Well, I'll tell you where you stand. You stand right on the verge of a 3-on-3 fast break. That's where each week we pick 3 coins from the 300 level market cap and make our pitch on that coin. So for everybody who's a subscriber, you know about the 3-on-3 fast break. I'm going to start this off. I got it's all Rise coin, of course. You know who it is. It's Rise. It says the word Rise, and we picked Moon coin in the past. Moon, it's going to the moon. Rise, it's rising.
Hey, I'm seeing a trend here. I'm sorry, I'd cut you off. I'm
Moon,
seeing a trend.
Rise.
You're picking coins that have Moon or Rise or Up in them.
Is Up coin
actually? So you're almost there. It's actually coins with vague sexual connotations.
Hard on
so
coin.
There's Moon.
Is that next week?
There's Moon coin. There's Rise coin. There's
Hard
jerk
on coin.
Right.
Cum coin has got to be next.
I think cum coin is probably a little. I don't think that's as much innuendo as I was looking for. That just comes right out there. Comes right out there and says it. Now, if there was like semi coin, you know, that'd be something. Maybe I'd purchase. Chub coin. Anything that looks like it's going straight up.
Like it's getting hard there, but it's just not there yet. Yeah. All right. So what's your coin?
This podcast is getting very phallically related.
Hey,
So
we never
right now,
pretended to be anything else.
So we're at 45 cents right now. It's got a market cap of 52 million, circulating supply of 113 million. The website, they even went revolutionary with their website. The website is rise.vision. There's no .com, there's no .net, there's no .io. They went straight up vision. So anybody who's got the balls, that's another phallic general reference. Anybody who's got the balls to name their to end their structure in .vision, that's somebody who's got something on the ball. So I'm going to leave it at that. I think it's a great coin. I'm not going to buy any of it, but it's up pretty big right now. And there's a lot of people who are saying that they really like it. So I hope that they purchase this coin. I hope they pump it and have a great pump with it. Pump coin. That's the next investment for next week.
What is Rise Coin? What does it do?
So basically what it does is it rises.
It rises to the top. It's like butter.
It just keeps on rising, guys.
Yeah. So a couple things about Rise Coin. They just got set up on Binance. They're looking to get here shortly on Bittrex. They got mobile wallets for Windows, Mac, Linux, web wallet. So they got browser wallets. It's on the rise, even though right next to it shows that it's actually down 8.07.
So basically, it's the epitome of a shitcoin.
I'm not going to tell somebody they have a shitcoin.
I will.
But what I will say
Rise.
is,
hey, note to Rise. You have a shitcoin. You know you do. Learn to love it. Advertise it.
Embrace it. Pump it.
Get your shit. Get your money. That's what you do. But you got a shitcoin.
If you go to their website, they have like an infomercial set up by a
Billy Mays.
Web. It's honestly, yeah. It's like he's like a millennial Billy Mays ghost. It's like the ghost of Billy Mays. Yeah, Billy Mays. Rise coin.
There's more.
Rise coin.
You thought
the power of power paste in Rise coin.
You thought you were risen. Now you're risen even more. Rise harder.
Right. Okay. So that's Rise.
Okay.
Fred,
So
tell me about a coin that
Rise, a shit coin. I don't know that it does anything special though. It basically looks just like another, currency coin.
What's that?
Yeah, I think it's like a NIM. It's like it's designed for decentralized apps.
Yeah. Decentralized app, mobile app platform, sidechain tokens. They don't follow the shitcoin template that Tater would use, so that might be why I picked them. They actually have a full website.
Yes, I will give them credit on that. They have a regular website that
Heston's mind has been changed.
I'm all in.
I just sold all my Bitcoin for Rise.
Shoot, they are up 82% right now.
Oh God, I'm out.
Bought it too late.
Somebody's buying into it right now. They just got launched on Binance, and I think that's giving them a big boost right now. Yeah. And I imagine they'll probably have another big boost here when they get on the Bittrex.
Binance
Probably
has a
not.
decent vetting process unless you get voted in on that coin of the month voting process. So,
guys, we have to reiterate: this is not investing advice.
No.
Do not listen to
Obviously
us
not.
when it comes.
No,
to
this
investing.
is investing advice. I advise you not to invest in this.
Yes, please do not
well,
invest.
I don't know
in
that I would even
Rise
say that.
or
You
any
say
of the
that,
coins that we talk about.
Yeah, none of this is investing advice. Please ignore what.
this is what it comes down to. We do our due diligence and we do our research, but all investments have risk. Everybody knows that. Whether you're investing in the crypto nation or you're investing in the stock market or you're investing in real estate, every investment has risk. So you take that risk on yourself.
And you
And
mitigate that risk against names that are awesome like Rise.
These are some of the riskiest coins in the market. Obviously, there's 1,000 coins out there, and they get riskier as you go down. But at this level, there are some coins that have potential. And we want to bring some of these coins to light so that you can look at them and potentially buy in on some of that potential. Now, you have to do
For example, Paragon. It was our coin of the 3-on-3 2 weeks ago. It was at 389, I think.
Sounds like you have
Are you going to finish chewing that?
Those are nuts, aren't they?
Ladies and gentlemen, John McAfee. He's on the air.
I'm going to stop that thought.
Hey, so, okay, enough hating on Rise. Okay, that coin's going to the moon. Everybody knows it. But Prater has actually a pretty sexy coin, Elastic.
Yes, my coin my 3-on-3 fast break coin is Elastic. We spent way more than 3 minutes on Tater's coin there, so I'm going to run through this here pretty quick. Elastic has a revolutionary open source project aimed to create a decentralized, trustless supercomputer.
Whoa.
Right?
Sounds sexy.
It sounds pretty sexy. Besides its own dedicated blockchain, the system contains 3 main components: a core client, an XEL miner, and the Elastic PL programming language. They are currently 29 cents a coin, have a market cap of 25 million, and a circulating supply of 89 million. One downfall is their website currently isn't up, so there wasn't a whole lot of information on the coin. They are right now right on the verge of the 300 to 200 level. This is one that I would just say, keep an eye on it. Maybe take a look at it in a couple of weeks, see what they've developed from here on out, and see where their website goes. I know supercomputing technology is a really big thing right now. People that aren't mining, and are using their GPUs to kind of assist in supercomputer computing. Obviously, a lot of people probably aren't doing that because you can actually make some profits mining. And if you're assisting in a supercomputing processing, kind of pool, you're not going to make any profits there. But just the concept of supercomputer on the blockchain is interesting. And if it's something they can get in on early, and develop from there, it could be something in the future. Just a coin you may want to keep an eye on. And you never know where it could go from there.
Definitely. All right. Yeah, my 3-on-3 this week. And by the way, these 3-on-3 fast breaks, don't invest in these guys. I mean, do not just throw your money in because we're talking about these 3-on-3 fast breaks. Research them. Once you do your due diligence and you see if these guys have a good project and have a good future, then throw your money in. Don't be crazy.
Yeah.
If you want. Yeah, if you want. Okay.
A lot of these are a lottery ticket. I mean,
that's exactly what they are.
It's if you do your own research and see something you like, at 19 cents, you throw in, $100 and it goes to $100 a coin. I mean, it's a 1 in a million chance, but you never know. Some of them have, if they've got good technology behind them, and you think they've got good technology behind them, they've got a good team behind them, they've got, a good marketing campaign. There's no telling what some of these can do. You just never know.
You just have to make sure you do your own research, guys.
Yeah.
Exactly. That's what it comes down to. All right. So my 3-on-3 fast break this week is Quantum. Do not get that confused with Qtum. Qtum is an actual coin that has real life applications and is about in the top 10 in market cap. Quantum is in the top 300 in market cap. They don't necessarily have real-life applications, but there are some things that I do like about them. So what is Quantum? Well, connecting networks, that's what the website says. I don't fucking buy it. All right, so the big thing about Quantum is it's deflationary. That's their main premise, okay? What does that mean? I would think every cryptocurrency is deflationary, but this one specifically focuses on being deflationary. How they do that is they burn their own coins. Okay, so how do they burn their own coins? All right, this is how they do it. Okay, from what I understand, they take the profits of their coin. Okay, so when you buy a Quantum coin and you buy it with Bitcoin, they take the Bitcoin and then they distribute that Bitcoin into other investments. So they take the Bitcoin that you gave them and they distribute into marginal investments, and to other Bitcoin investments. And they basically eat off that profit. Once they eat off that profit, they take the profit and they buy their Quantum coins back. And when they buy their Quantum coins back, they distribute it into a black hole address. That black hole address gets burned. So, from what I understand from this coin, so the point is that it's incredibly deflationary.
When you burn the coins, it becomes deflationary, and the value will go up, basically.
That's their theory, is that the more coins that they burn, the higher the price will go. I mean, it makes sense.
Yeah.
I mean, it makes sense. And if you look at the price, it has gone up and up and up. You can't argue with it because it is actually working.
The only problem is at what point do they stop burning coins?
Yeah, exactly. That's my.
They get to one coin.
That's my problem. Is where's the end game? You know, when do they reach that point that they burn so many coins that they're down to one coin?
Well, I don't know if it would because they can't burn coins that are held by somebody, right?
No, they can't. But
if they're sold back, then they can.
But if you sell those coins
it's like that one coin we talked about on, I think it was episode 2. We talked about there's a coin out there that's got two, or there's one. There's only one coin, right? Yeah. And so eventually we get closer and closer to that. And so the value of everybody's coin, I mean, I think the idea makes sense. The value of everybody's coin is going to go up relative to where it was to begin with. But does that value go up against the dollar? I don't know. Can you exchange it in for a higher dollar rate at the end of the period of time, or do people get tired of it?
If you look at that one coin, though, I mean, how Satoshi takes you to 8 decimal places, so there might be one coin, but can you buy one Satoshi of every part of that coin? Does that make sense? So there might be one coin, but you could own 0.000000001 of the coin, and then that's the value and the trading area for that coin.
I'll tell you what, just specifically about like Quantum, okay? I don't see a huge use case in Quantum, but if I were to throw $25 into Quantum, if I had $25 to burn, throw it into Quantum, just see what happens. Because the fact that it is deflationary, they're going to keep on burning coins. They're going to keep on burning coins. So if actual people keep buying them,
yeah, value's going to go up.
That is the most important point. If people keep buying them, then you're going to make money. If nobody buys that shit, then you won't make anything, obviously.
Not necessarily. If
that's true of every
coins.
True. But the people that have already bought would have to not sell.
Exactly. If people hold or buy, it's still going to gain value as long as people don't sell. So that's an interesting concept.
Well, yeah, but does it gain? The question is, does it gain value against the dollar? So it may gain value in its own ecosystem.
It doesn't really matter. Does it really matter?
Bitcoin. It depends on what you're trading against.
So if you have Beanie Babies, and they have shit value right now.
Why are we talking Beanie Babies?
because they're a comparison of a lot of people compare Beanie Babies to Bitcoin because they say it's a bubble. And it's the same thing. It's a big rush to it. So Bitcoins have a value, and a lot of people compare the Beanie Baby boom to the Bitcoin boom. So tulip bulbs, same thing. So say it's tulip bulbs. Say you got tulips, and you sell the tulips. If nobody out there still wants to trade you tulips for your dollars, if they're burning all the tulips, then your tulips don't mean anything.
True, but if that's what is it? Economics, supply and demand. If there's less tulips and they burn, 80% of the tulips, the value of tulips are going to go up.
I think that's
assuming,
the point.
yeah, but you're assuming somebody still wants tulips. But in the realm of this obscure cryptocurrency, nobody may want them still. So there could be less of them.
Yeah,
but
the value is of
I
all
think that's
crypto.
but the
thing,
value against
like,
the dollar
does
may not
anybody
have gone
want
up.
quantum? Does anybody want quantum? Will
Does
anybody
anybody
want
want-
quantum in 6 months? Probably not. But maybe they will. Maybe they will. I think the point is the quantum is they're hedging their bet of people will want this in 6 months, and there's going to be less of them. That's the thing, So
No, I definitely see the concept, but it just hedges on some things that are, I think, out of their control.
I think what it comes down to is that's the great thing about this 3-on-3 fast break is we
Will
start
anybody
to
want
delve
Bitcoin
in.
in 6 months?
Yeah, I will. I think that's the thing of this 3-on-3 fast break is like we get to delve into coins that nobody's fucking ever heard of. Nobody's ever heard of unobtainium or quantum or any of these coins, but we get to shine a light on them a little bit.
There's a clown on the internet that would beg to differ with that.
Well, yeah, I've spoken with that guy, and he guaranteed he would kill me. So we're gonna move on from that clown.
All right. Speaking of moving on, let's move on to our coin focus of the day. So our coin focus is Wanchain. So Hasto, you actually attended a Wanchain conference.
Yes,
and,
I
Yes, it is.
and if you just want to talk about that for about 20, 30 minutes.
Oh, okay. Well, all right. Well, I don't know if we're going to do 20, 30 minutes of it, but I did get the pleasure of going to speak with a few of the people at the top of Wanchain. I did go to a presentation in Austin, Texas, with Jack Liu and Dustin Bington of Wanchain. And, I mean, I got to tell you, I think I really like the way that I like where their head's at and what they're trying to accomplish. The idea of what they're trying to accomplish has not really been attempted before. And this whole blockchain technology and this whole crypto verse that we're in, it's all new. So there's not a lot of people that have tried what they're trying. But at the very, 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 very basics, and now their philosophy is complicated. I mean, really it is. But at the very, very basics of what they're trying to accomplish is they're trying to make it easier to trade and exchange digital assets on the blockchain. Okay, so if you have your Ether and you have your Neo and you have your Tether and whatever coin you have, you have a bunch of coins. Everybody has a bunch of coins. But you have some coins on Bittrex, and then you have some coins on Binance, and then you have some coins on Coinbase. Obviously, that gets confusing quickly. So how do you consolidate all that stuff? How do you make it more easy? Or how do you make it easier to access? Well, you create a protocol that combines all those digital assets into one asset called Wanchain. And that's what they're trying to do. So they're trying to take all financial digital assets and funnel them through their digital asset, which is called Wanchain, which their token will be called Wancoin, I believe. But that's basically what they're trying to do, is you have all these coins, and they're trying to be a decentralized bank or a decentralized exchange to trade and exchange all these coins within their coin. If that
Now, where does the name Wanchain come from?
So Wanchain has a few different meanings. Wan meaning wide access network, which anybody involved in IT or computer science or anything like that would know. But it also, Wan in Mandarin means 10,000 or many. So basically, the Wanchain is trying to connect many chains into one chain. They're trying to funnel all these blockchains into one.
What I like about Wanchain is the cross-chain blockchain architecture. So the fact that, and if I'm not mistaken, this is similar to what Omisigo is wanting to do, where similar but not the same, where Omisigo wants to be an app where you can exchange all your currencies for one, almost be a centralized, decentralized banking system. And I said centralized, but a decentralized banking system for all the cryptocurrencies. So where you could exchange, where Omisigo you could exchange your cryptocurrencies for fiat and back and forth and send it and all that. Wanchain seems like it just wants to be mostly for cryptocurrencies, if I'm not mistaken, where you can exchange them across. But they also have their own chain, where all that stuff can be built on it. Also, from what I understand, they're partnering with IOTA, the Internet of Things, and then what's the other coin that they're partnering with? I thought there was a third one that they're kind of working with.
I think they were in talks with Icon about implementing some of their technology into their own code.
Recently, there's been a lot of hype around Wanchain.
Yeah. Okay. So
it's Aeon.
All right. Yeah. Aeon and Icon. Yes.
Yeah.
Exactly. So, yes, there has been a shit ton of hype around Wanchain. It's crazy. It's crazy. Okay. So, Wanchain's ICO, they had a hard cap at 35 million, and they hit that in 11 minutes. I mean, which is insane, but it's not unheard of in the cryptoverse.
So what's the price coming out of the ICO?
What's the price coming to ICO? Okay, well the ICO, I mean, I can't tell you that. The ICO hit at
once it hits after the ICO, coming out of the ICO, what's the price?
And there's no one can tell you that for a fact, but I can tell you a prediction. Because when it was an ICO state, it hit 35 cents per token, right? Per token, it was 35 cents. And but very importantly, that was when Ether, because this is an ERC20 token, so it's an Ethereum token. That was when Ethereum was $300. Now we all know it's about $800. So it's hard to judge the price of that token off Ethereum when Ethereum has tripled in price. My evaluation, I would put it at about $1 a coin to $5 a coin, maximum $10 a coin of when it hits the market. Now, like I said, I did get the opportunity to speak to Jack Blue and Dustin Bington, and obviously they wouldn't give me any answers of what exchange they were going to be on, when they were going to drop on the exchange, or what the price would be. They don't know what the price is going to be. They do know what exchange they're going to be on and when they're going to drop, but they wouldn't give me those answers, obviously. So my guesstimate, I would say about $5, $10 maximum, somewhere around there.
At $5 a coin, it's not. I think that's still a little high coming onto an exchange for me. But $10 a coin, I mean that basically gives them a market cap of $1 billion right from the start. And I mean, you're talking, Brandon, you were telling me that's 10 times higher than any other coin that's ever come out. And I realize there's a lot of hype around this coin. You know, the technology behind it seems to be very strong, but that just seems like, over and above for me. I just don't.
Okay, just so I'm sorry.
Retracement right off the bat.
I'm gonna have to. I know I'm pumping Wanchain like super hard right now, but I really, really, really have to just speak on the amazing technology that they're developing right now. So not only are they cross-chain platform, so not only are they trying to combine all these coins into one coin, so they funnel all these different coins into one blockchain, but there are also privacy protection. So they take all the best points of Monero and they implement them into their own chain. They use private smart contracts, okay? So that they use stealth addresses, just like Monero does. One-time public addresses, meaning you use your address, it's gone immediately. Immediately, as soon as you use it, it's gone. They use ring signatures. Anybody that doesn't understand what ring signature is, think of a joint bank account. Say there's two people on a joint bank account. You have to have both of their signatures to withdraw that money, right? That's how a joint bank account works. Ring signature works in the same kind of way. So you need multiple signatures on the blockchain to validate that transaction. The thing that Monero does and that Wanchain does as well is that a lot of those signatures are decoy signatures, so it makes it completely anonymous. You can't tell where the actual incoming transaction is coming from because a lot of those signatures are decoy signatures. There's a lot. I know that might not make sense to a lot of people, but
no, it's cool. I think that's smart. It's crazy.
There's a lot of information that goes into Wanchain. They also use the stealth address, which Monero also implements, the one-time public access keys. So not only are they using the ring signature implementation, which is just amazing technology. Monero came up with that. It's great. But they're also using the stealth address one-time public keys, which basically means when you use your public key. So everybody can understand probably if you're in the cryptoverse, you could understand when you send your Bitcoin from one address to another public address, you copy and paste it and you send it there, right? You send it to that address. Okay, now imagine that address that you sent it to disappeared. That's how Monero works. That's also how Wanchain works. So Wanchain is trying to be the future of the financial banking system of digital assets, but they also see the importance of privacy in that. So they're trying to take all your financial digital assets, so all your Bitcoin, Ether, Litecoin, all these coins that you have, and combine them into one chain, but they're also trying to make it private at the same time. So obviously, they have ambitious goals. Will they meet them? I don't know. That's the big question, really, honestly.
I mean, look, it sounds like a hell of a coin. I'm going to go out on a limb and I'm going to make a price prediction here. I know, so I always get a lot of shit right on this channel for trading by feel. But let me just I'm just going to throw it out here. I'm going to make a price prediction on this coin. It's not going to be a number, but it's going to be a process. And this is what I think is going to happen with Wanchain. So right off the bat, Wanchain is going to explode. Then immediately following that, it's going to crash into the absolute dirt. And then over the course of the next 3 to 6 months, it's gonna regain its growth. And I think it's gonna follow a very similar pattern to Facebook. If you remember, Facebook actually had a really good protocol, right? Facebook was great, right? Everybody knew it was great. They shot out the initial offering of Facebook stock. It exploded. It exploded artificially, and so a lot of people got caught up in this trying to buy the rise. And all these people who were experienced investors bought the rise, and it almost immediately didn't rise, right? It almost immediately crashed into the dirt, and a lot of people lost a lot of money. It had a little pop right in the beginning, came off, everything was crazy, and then almost immediately dropped down into the dirt, and then kind of regained itself and actually did pretty well over the course of the next 6 months to 18 months. So, that's what I'm saying. Today is Sunday the 11th. It's February the 11th. I'm making that price prediction on this coin. All the FUD, all the excitement, everything that's pumping this coin up. There's no way that it can live up to these expectations right off the bat.
But just my personal opinion, I see this hitting sometime in February. And I see it hitting about the $5 range. I think anything over $5 range is overpriced. So if you go ahead and buy in over $5,
you'd probably be fine long term, but
yeah. No, long term.
Sure.
If they can pull this off, oh my God, Wanchain really does. They have a good system in place. I really do. I do believe in their coin. No, don't get me wrong. And the fact that they're based out of Austin, I just love that. I really do.
Austin's a great place. Great to be from Texas. All right, guys, moving on to the breakout coin of the week. This is my favorite section right now because I have the ability to say it's my favorite section, so that's good. As long as I'm in the lead right now, I love it. Guys, week 4, we had ADA. Hesto picked Ethereum, and Prater picked Tether, the safe bet. Well, I think at the time, I think all of us were saying that was a pretty clever bet.
Still made money.
Stay in the middle. You did still make money. Somehow the coin that matches the dollar actually lost to the dollar, and you made some money off of that.
It doesn't account for inflation.
So Cardano, I bought it at 28 cents. It ended up going up 10 cents. So made it $35 off a $100 investment. Ethereum went from 651 to 850. That was a $30 gain off a $100 investment for Hesto. And Tether went up to $1.03. So it was a $3 gain.
Still Tesla instead of Tether.
Then you'd be on the moon. All right, guys. Week 5 coming up. We'll see how we end up next week. I'm looking at NEM coin. It was 54.9, so 0.549, 54, almost 55 cents at the time of the challenge. Hesto is picking IOTA for 1.80.
Easy bet. IOTA is the Internet of Things, guys. Gonna be the future. Will it be the future next week? Damn right.
You better bet it, Mike.
The future is next week. Technically, by technicality, the future is next week. So it will happen. IOTA will jump up. It was $4 a month ago. Now it's $1.80. It's time for a rebound. It's gonna happen.
Love it. Prater picked NXS, not in excess. $2.83 coming up.
Yes, sir. I picked this one on some technicals here. It's trading down. It's got a downward trend, so I'm fighting downward trend here. But I'm thinking it's going to bounce back over that trend line. It's pretty close to being oversold on the RSI and the MACD, and I'm looking for some convergence on the MACD there on the daily charts. And the old Ichimoku's cloud is showing some support in the future. So, like I said, I'm getting into these technicals here and trying to learn about them. So we're gonna see if they work out this week for me.
If they pan out, you can do the MACD. I'm gonna try to get some OMG and buy a Big Mac. In where are you going to, Hesto?
I'm going to Thailand.
So Hesto's going to Thailand. So heads up to everybody. I'll let you talk about it for just a second. I just want to introduce it. Hesto is going to Thailand. He's going to be coming at us doing live spots from Thailand. He's going to be trying to
I may test out that OMG network.
Yeah, test out the OMG and buy the Big Mac on OMG. And then you'll know.
I'm also a vegetarian, so I will not be buying the Big Mac, but I will be buying a large fry in OMG.
I'll take a large fry.
Me too. I read this week that the McDonald's fries has some sort of chemical in them that can regenerate hair growth. I know y'all two don't really have a problem with that, but I'm starting to see a little.
I have a great problem with that, and I've been stockpiling large fries. I actually have my tub full of large fries. I haven't taken a bath in 3 months because my tub is just full of large fries. Just McDonald's fries. They're cold, but I still keep eating them because I'm hoping my hair will grow back. I don't know. What do you guys think? Is it looking good?
I went to McDonald's. I had some shirts. I dipped them in the fry grease to try to see if I could grow some chest hairs. It hasn't worked.
Yeah.
I still look like a dolphin.
Hair on my head, not the rest of my body.
Yeah. Well, I dipped my balls in a large fry, and my pubes have never looked better. So there are.
It must have been a curly fry.
There are use cases. Yes, there are use cases. Curly fries.
Curly fries. I love it, guys.
Jack in the crack.
I think that about
an explicit episode.
Oh yeah, this will be, if we don't mark explicit on this one, we're gonna have some trouble. Thanks a lot, McAfee.
I'm so glad to have you guys.
Yeah, we're glad to be here, and we're glad to see you guys next time, because I think that about wraps everything up for us here on the D. Another weekly episode, the long count episode, the long count Mayan calendar. Send your questions and comments to info@decentralizedtalk.com, or check us out on Twitter at DTalk Podcast. And as always, feel free to post your questions in the forum. We do read the questions, and so we do answer them, so let them rip. I appreciate everybody out there. We appreciate you guys. Subscribe, smash that like button, share us, retweet us on Twitter. We're growing every single week. We're getting bigger. We're getting a larger following, and we want to be here for you guys and help grow this community of cryptocurrency, and appreciate everything that you guys are doing. Have a good night.